Oh boy. Well, let's see here. Hello, hello, hello. I'm going to be sharing my live stream link with the group. So give me just a minute. Kind of just making sure all my audio is working. Everything like that. I said it last time, which kind of just blew up in my face. Yeah. Well, okay. So we've been having a really good. I feel like I was reading this thread. I had some stuff I had to do. I was reading the thread on the Discord group, and yeah, I think that there's been a really good conversation. I'm trying to like look and see what everyone has said here, and Kramer, I like what he's saying. He's just kind of doing some math about the dilution. Mowgli, I kind of responded to him by saying, he was saying like, well, I don't see how this could possibly go to the twos or whatever. And someone else, I think, echoed that and said, hey, if it goes to the twos, this is what I see. I can't imagine them doing anything further than that. I really had no real strong skin in the game for this move. It's kind of funny in a not funny way, but I actually had hedged for this move. I thought that it was pretty clear to me that if this were to break down, it would head to at least 367, which was the first place we stopped. And then it would probably try to go for some kind of a spring action low, assuming that it's not just a breakdown, okay? And there's evidence goes both ways, all right? And I talked about mid to low threes. And to be fair, I'd also talked about breaking up, just so we're clear, and I'm not trying to like fake anything here. I'd also talked about this window being a possibility for the run-up. I don't think it's a good sign that it took as long as it did to get here. And the more I think about this range and the more I think about what happened to earnings, the more I think that this is not... There's only like a couple different ways to interpret the move. And the way this set up, I know it seems a little odd, but I had pinned out this window here to where I thought was the most likely period for that price action to start taking place. And perhaps, maybe this is a big nothing burger, right? I don't want to like beat around the bush and just make all these vague comments for an hour or whatever. But this is right where we've got that high amount of selling volume. And on the breakdown, even though I knew, and I said it repeatedly, that it was possible we were going to drop for that mid to low threes, which is where we are, for that spring, we had this kind of fake out reversal right before we made that move. So if you're following, here's where I was, okay? My comparison has largely been to that March region. I didn't think we hit the low back here at 362. I was very clear. I've been very, 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 very clear about that. So I don't really feel like I need to apologize for anything about us making a new low here. I felt like this was too weak. There was no volume in this drop. It looked to me like they were testing that liquidity zone. I had mapped out this area saying, look, it seems very unlikely that the dip down here was the selling climax. It doesn't make sense. There's just no volume in it. And every single time I said that on stream, typically someone would say, wait, I thought this was the low. And I would say, no. But here's the good news, is that I think that it's very possible that you're heading down towards that final check against that major creek that we've been talking about for a while. So good news, bad news. Good news is that I think that that's probably what's happening, okay? Bad news is that there is a lot of signposts that have happened between here and there. So between February and what we experience now, here in April, there's a lot that's happened. And it would be silly as a technical analyst to kind of ignore these kind of fundamental conversations that are going on, and then to not go back to your chart and say, okay, you had a thesis, here's what your idea was, more of like a hypothesis, right? You have this idea, and it's going to be tested. And the idea is that you're going to experience a bounce, and it's going to be somewhat similar to what happened in March, right? Where March of 2022, where you're kind of hitting a bottom for liquidity, and then you're going to nosedive for some kind of a spring action. If this is a spring action, I need to be really clear here. If this is a spring action, this has to be a terminal. This is a terminal spring because it's coming very, very low. And in order for this to be a terminal spring, and you need to hear me really very clearly, the recovery on this needs to be pretty fast, if not instantaneous. It needs to be basically like we hit the bottom and then we just sit there for a second maybe, and then we return. If anything lasts longer than, I would say, about a week or two, maybe 10 trading days to perhaps 14 trading days, like at most, that's kind of as much as time as I would give it. And if anything doesn't, if nothing happens as a result, meaning you don't get that buy-in, the enemy is at the gate, right? Like it's going to be taken down further because the setup here is such a on the wire setup that, again, and you have to check yourself at the door, because anytime you come to AMC, you're coming with all of that knowledge, right? Whether it's all of the fundamental bias that you might have, all the fundamental information you might have, the very bare bone facts of it, but then you also have like the technical setups. And if I come at this and I say I think this is bearish, it means that I think it's going to go continuously lower. But I've been saying repeatedly that I don't think it's super bearish on the macro. I've said that I think that every time I've done a video lately, I've said I really do think that we're going to enter into more of that spring-like territory because we're going so close now to what I perceive as that macro creek check. I'm talking about the one for 10 years, like a 10-year check on this major trend line. That's so important from a technical standpoint that it's hard for me to feel like nothing would happen. Like there wouldn't be some kind of major buy-in. And at these prices, you feel like, yeah, of course, this seems like a really good deal. The problem is, and it is a problem, that there's always a counter case for everything, right? And if I just approach it from one point of view, I'm going to get labeled as this. And if I approach from another point of view, I get labeled as that. So in the past, I've come up to AMC. I know you guys are like, this is super esoteric or whatever the word is. It's a little too introspective for me, Booksy, to just talk about the chart. But like, hear me out because it's really important that we start with this today. If I've come at this in the past saying I think this is going to turn around and be bullish, I've been accused of, hyping the stock and being a hype man and saying like hopium basically is what they always say. Like you're just dishing out hopium. And if I come at this and I'm bearish, I'm accused of creating some kind of a negative sentiment cesspool, right? Like an anti-AMC kind of thing. And in every single time I've approached this, every single time, I've always tried to look at both sides as best as I can and tell you what I think is most probable. And I'll be honest with you, up until not just this drop, but up until this particular movement to the upside here. I'm not talking about the drop, but the upside plus the drop in that dilution news, and that's what it is, okay, is that we're going to do another 350 million or 250 million in offerings. I've been fairly bullish on the macro. But I'm going to tell you right now, there's something really wrong with this setup, okay? And it's this. The volume that's being put into this to the upside is very, very meager. Now, I know that folks are looking at 13F filings and they're saying, hey, man, this is up to like 30% institutional ownership. Well, to be honest, I feel like the ownership shifted when APE was introduced. And I don't know if there's just been this kind of disconnect because you have two different groups of, you have, oh, here's a percentage ownership in APE and here's a percentage ownership in AMC. But you have to remember those shares were converted. And I know for a fact, because we were sitting in the middle of it, that everybody was trying to get out of APE, right? Everybody perceived APE as some kind of a crutch, and so they got out of it. And even other YouTubers were saying, hey, we should sell this. It was definitely a way for institutions to garner an extra percentage of the votes, and they did. You can look at the debt, and you could talk about restructuring. You could look at the debt, and you could talk about how could they make an agreement with debt for stock kind of stuff, sort of the Antara business, there's all kinds of stuff we could talk about. And in the end, yes, dilution pays off debt. And, if he comes away with this and has like $1 billion in cash or he's able to make more deals to reduce the debt, great. But the debt is very high. And what bothers me about this is that there was a negative sentiment, and I'm not going to sit here with a tinfoil hat the whole time, okay? I'm going to get straight to the point after this. But I'm trying to set the stage so you understand where I'm coming from. Earnings was weird. Earnings was a bizarre, strange earnings call to me. And I said it and got in arguments with people about it because they didn't agree with me, and that's fine, But to this day, I'm never going to change my mind about it because I look back at that. I think it was the strangest earnings call that we've had in a really long time because they beat out expectations. And not only did they beat them, but they improved year over year. I mean, it was overall a really good earnings call. And we've had 2 of those in a row. And for some reason, and I said it then, and now it's starting to make sense, because I didn't know what was going on, or I didn't anticipate what was going on. For some reason, Adam Aaron continued a negative sentiment, even though, for whatever reason, this earnings was good. And I said I didn't understand it. It felt like it should be a Cinderella story, and instead we got retail was out of their minds, you guys are crazy, you guys are doing, he was literally responding to Twitter trolls or whatever, X trolls, and saying hey, you guys are tinfoil hat, and we've been working hard for this company, and you think we're in league with the shorts, and we're not. But it was it wasn't just that, it was every time he said something positive, oh, well, we beat expectations, thank you, Taylor Swift, thank you, Beyonce, but the writer's strike really hurt, but we have this really weak quarter coming up. It's like he was setting himself up for, I don't want to say disaster, but it was like he was setting us up for negativity. And then there's these tweets that come out, and I'm not on Twitter, but I'm looking at this and I'm thinking to myself, there's got to be a reason that he's still so negative, because he's talking about, right in here, he's talking about a weak first quarter of the year. He's talking about it a lot on X, publicly. The CEO is talking about how we're going to have this bad quarter. And now it kind of makes sense. So when I'm looking at this, I'm thinking about the technical setup, but then I'm also looking at the sentiment, and I'm looking at what the CEO is saying, obviously. And if you're not paying attention to that, well, that's silly. Like, of course we should pay attention to that. And I was. But the thing is what's odd is that from a technical standpoint, this is a near breakout. This reminds me of some of those really crazy ones that we had, like December, I think, or whatever it was of last year, not last year, the year before last, where like you broke above and then you had a distribution completely by itself. And that's what this looks like to me, is that it doesn't look like a UTAD to me. It looks like a spring action that basically reversed overnight. And the reason I say that is because it jumped the creek. It jumped the creek, it approached the next one, and then without majority of the market being able to trade it, you have this dilution news that dumps the stock. This is the second time this has happened recently. The first time this happened was right after earnings. Now, why does that matter? Because both of these dilution newses happened right after earnings, but the difference between the two is very obvious. It's timing, right? This was quite literally like the day after, and this was like weeks after. So now, knowing what we know now, we have two really good killer, really good earnings reports. But we have negative sentiment coming from the CEO. He's constantly beating down on the fact that there's all these problems. The movie industry is not recovering. Even though he said, and I could basically quote it, we don't need the box office to fully recover in order to return to profitability. Even though he said that, he undermines it by then saying that it's this huge issue and it's going to hurt their business. I don't care. You know, we could talk about the debt restructuring all day. When a CEO comes out and says we're about to have a week, I mean, it'd be like Apple saying we're expecting our sales to go down incredibly because of some event. You know what I mean? Like anybody that says that comes out and talks about their company that way and says outwardly that your sales number, the big money maker for you, is going to be bad, it's going to hurt the stock. But it's not that. It's that he's doing it by coupling it within the dilution news. It's sort of like a justification, like for dilution. Like, hey, you guys voted this in. That's what he said, right? You accepted that we're going to try to do this, but he's padding it. And when I look at the setup this time, here's what bugs me, is that it just sat here. We sat here on extremely low volume. We went down on what I think is best described as a descending triangle formation. That's where I got the 367 target from. That's just the initial breakdown target. That's a Bolkowski target. I mean, it hit like 362 on the first drop. It works. You don't have to agree with everything that Bolkowski does, but his statistics are phenomenal. And frankly, like that was one that I got. The other breakout target was like up here at like 512, which makes perfect sense. Those are mathematically derived targets based on this descending triangle. And we've just gone through a bunch of this stuff on the big picture, and it's not been good for us. Okay? And what I mean is that if you go back and you look at the big picture here, something similar, and this is where I'm kind of going with this and where I'm going to stop with the whole like soapbox stuff. It reminds me of what happened here. Like it's really similar in a lot of ways to what we experienced basically from January of 2023 all the way through August of 2023, which was we created essentially like a falling triangle, the descending triangle that then broke out to the upside and then reversed hard to the downside in a pretty monumental landslide. This was not in a question in my mind like not a descending triangle. I remember when we were doing this, we went through the process of doing the breakdown numbers. And you remember how there was a descending triangle on the algorithm, like between the two, when we were looking at the comparison between the two? Some of you might remember this. A lot of you are probably like, I don't know what you're talking about. I mapped out the deviation, and the deviation chart was very interesting because it had this massive falling wedge type shape. And it looked like it could go one way or the other, and it ended up going the other, right? And then on the combination chart, which was a combination value chart, some of you might remember that I got a $1 target on the combo chart. The market value back here before we fell was like what it is now. It was like $3. And that was essentially like the average value, the correct average value, if you weighted the averages correctly based on the market caps for both APE and AMC. When you did that correctly, you got a mid-ground kind of target, and it was like $3. And it also had a breakdown target if it broke downward on this descending triangle. The other places that we see descending triangles on AMC, or that kind of look like descending triangles on AMC, are specifically like these regions where you're kind of in the middle of, or right before a big drop, and you have that downward S-curve. You might see a descending triangle formation. The same thing applies to the upward moving S-curves on AMC as well. This isn't just AMC, this is in the market on the whole. You might see that ascending triangle as well to the upside, just like you see it to the downside. And what we most commonly refer these as is like the midpoint of an S-curve. That's the way I've described it over the last couple of years. It's also typically like this kind of midway point with cat ears. Okay, so now like thinking about all of that, you're kind of looking at it like, wait a minute. So you're saying that you think that this somehow may have been dependent, perhaps it could have been dependent on the news. What news was right here? This was the Judge Zern decision. And ultimately it was the conversion, because what it meant was that now you can do share offerings for the stock. And we already talked about this macro so many times. This whole setup is a gigantic cat ear. And this cat ear, the second ear, and I've talked about it for years now, but if you don't know what I'm talking about, it's this flat area at the end. It could go either way. It has, in very, very rare circumstances, unfortunately for AMC, this is one of those areas where that flat cat ear, that descending triangle, has broken to the upside. It's the example that is easiest to see is right here. There's micro examples all over the place, but the easiest one is that January reaccumulation. Really, it's February into like April, that reaccumulation where you have that cat ear structure, but it's descending like a triangle, and then it breaks to the upside, and you get a big continuation on that reaccumulation. Not surprisingly, if you go look at Wyckoff theory, reaccumulation looks a lot like distribution. Why? Well, we don't even need to like go to Wyckoff to see that this kind of setup right here looks almost identical to the setup that we see right before the big drop in November. They're always very similar looking. And really, you're just waiting to see which way it breaks. And I think that what this represents to me is a lack of conviction about the direction of AMC during these cat ear periods, is that we're setting up for like these big decision moments. And when you get to these points, it's impossible to not have a little bit of a tinfoil hat, because if you look at these charts, you're probably thinking it has to be rigged. Like there's no possible way that you can come into these decision moments and have the chart look like this pattern that is easily recognizable on a macro scale right into the Judge Zern decision. And then likewise, each of these, we call them cat ears or whatever, each of these decision moments, right? Same deal here, second cat ear, decision moment, second cat ear, decision moment, are both right around the dilutions. There is absolutely, beyond a shadow of a doubt in my mind, and I can't believe I'm going to say this on YouTube, but I can't reconcile that chart price action with anything other than there's a fox in the hen house. Like there's an insider who knows what AMC is going to do. I don't think it's just financial analysis, but it's paired both with, so it's the emu, it's the big short, right? The one who is shorting this the most, who has the most skin in the game. They know, and they're setting up each time for that dilution announcement. And I can't even reconcile with y'all this particular move, because I'm looking at it now and I'm thinking about it as a helicopter move. I'm like, all right, what happened? We jumped over a creek. that should have been very bullish. And you say what you want, there was no question in anybody's mind, if you go back and you look at this main downtrend here, this is a breakout, and then you have continuous breakouts for the weeks to come, but the stock doesn't move. There's no buy-in. And this is where I'm kind of at a loss, because I feel like there's no there's no long that wants this right now. And this, it's very clear to me that the bigger short interest in this is driving it still. Like, there's not a clear change of character at all. The fact that the volume was sucked out of this time frame, yeah, it's always part of that descending triangle. And if you look up that pattern analysis, you'll see that usually there's a volume drought at the end of the triangle. And it has to do with the indecision of the market. But where is the long, right, that could have taken advantage of some of these breakouts that happened? They're nowhere. And not only that, but we went the weak route. Like, we didn't go the strong route. The strong route is kind of like what would happen and what did happen. If you're wondering, like, what do you mean, like, strong versus weak? A strong route is a little bit more like what happened here, where that second ear pushes back up to the top. Why? Because that indicates that there's at least enough buyers in this, that sellers want to drive it up and trap the buyers, and they want to change their position. They have enough buyers here that they can drive it back up and do what's called a UTAD, an upthrust after distribution. You see the same thing kind of in this particular move up to, like, at least for me anyways, anytime there's that second ear push, and then specifically if there's a massive amount of upthrust before the distribution, typically I honestly think it's a long getting out of a position. And in this particular case, you can see that this push up, which was accompanied by decent volume, was probably somebody exiting a position. It's that simple. Buying back, whatever. Re-entering, whatever. It doesn't make any difference how you want to look at it. It's distributive, so therefore it's not in the favor of a bull breakout. And nothing about this ultimately in retrospect could have been. So you're looking at it and you're saying, well, okay, upthrust means that there's a lot of buyers, it's a controlled move, but you have the ability to bring it back up, which is what a short would want to do if they want to, exit their positions a little more and then re-enter. So buy back their shares and then re-enter at a better price. That is not what's happening here. And that bothers me a lot. And so even though I've been talking about it, and I'm not saying this is out the window, I'm not. Even though I've been talking about it coming to mid to low threes for a while now, I've also been talking about this kind of macro bullish sentiment that I have, because I do believe that it's going to possibly have this massive spring action. Get to the point, Booksy. Here's my point. Okay, I'm going to switch charts real quick. And for this, you're just going to have to, like, hold on for just a second, and I'm going to show you what technically I'm talking about. All right, so that's all of the dribble about Adam Aaron. That's all the stuff about AMC's problem. I'm not really addressing the debt restructuring or anything like that. I'm just talking about, from a technical standpoint, the weakness that I'm seeing on the part of bulls does not indicate a change of character yet. And when we get to that change of character, it should be very obvious, but it's not here. Okay, it's very close, I think, but it's not here. And here's the big problem. When I go back and I look at on a weekly chart, here it is, right? I look at this setup. Is this possibly really bullish right here? Sure. On the RSI, we jumped over the moving average, and then we kind of just sat there, and then we dumped again. Now we're beneath it again. Does this look like it could be a possible midway point? We've talked about these iterations, that this basically is a gigantic version of what we experienced on a micro level from June to November of 2021, or I should say December. Yeah, it does. It looks like it could be that. But what is this middle area then? Is this the midpoint and then a bottom, or is this just the midpoint? And this is where I'm going to ruffle some feathers because you're not going to like this part of it. We are standing on the edge of a razor right now, because when we talk about, some of you who've been around with me for a little while will know this. When we talk about S-curves, there's only two kinds that we usually see on AMC with downside. The first is what I call a shallow S-curve. The second is just a regular old S-curve. The S-curve is very easy to spot in a lot of ways because it patterns out to be typically like a 50-50 kind of move. Really simple. Like you had a 50% place and then you push up again, or you have a 50% place and then you drop again. And that is the nature of the S-curve, okay? It's not that complicated. The only time we've seen anything else that's been any different is when what I refer to as a shallow S-curve. It doesn't happen that often on the big picture, but there are a couple places that you could probably look as a small example just off the top of my head. And then there are definitely a ton of micro examples of this. There's probably dozens and dozens at this point. But a small example of this would be like right around here in September and August of 2022, right after the ape news, we had what I call a shallow S-curve, meaning if you were measuring this as an S-curve, you would have mistakenly thought that it was going to continue downward. And it did eventually. It did eventually continue right to where that 50% marker is. If you go from the top of August to where we really hit that bottom, now it says $47. So it goes from 145 to 47. At the time, it was something like $9 or something. I don't know. Back up to like 35 or 32. It wasn't that much. It might have been like 25. But at this point, there was a shallow S-curve that occurred in September. Okay, that's one example. And then there was a kind of a mean 50% reversal before it continued down. Another example of that shallow S-curve might be right here. Again, the March bottom where it goes sideways. The volume kind of dips for a bit. And if you, again, had measured this out, assuming that this is going to continue, and again, did it eventually continue down? Yeah, sure it did. But if, for example, we could have misread this, and this is easy enough to do because it does work as an S-curve, right? You would have assumed that it's going to go down almost exactly the same thing that happens here, right? Where you think, oh, it's going to continue downward. But instead it has this really gnarly reversal pattern, and you end up with, it's like right here, you end up with this kind of 50% retracement before you continue downward again. And you can see the same thing applied here as well. I don't know why my chart's flipping out. It just is. Does that make sense? So the shallow S-curve is not necessarily a very bullish pattern, but it usually indicates that you have a need. There's some kind of a long that's in the play that wants to take it back up, and then it allows shorts to exit before any kind of continuation to the downside. And that's really what we see going on, in my opinion, in most of the shallow S-curves that we have. Now, some of them are really bullish, and those are the ones where you have a pretty strong, on the micro level, a pretty strong reversal that's met with no sellers. And then as a result, there's kind of a shallow S-curve, and then it turns back around. It doesn't continue downward. That would be like what happened right here, where you basically start an S-curve and then you don't continue it. But that doesn't happen very often on AMC. Why am I talking about S-curves right now? Well, I'm just going to point out a couple different ones that I've noticed, and they're nothing really new in terms of price targets, but they are important. So here's one that we've talked about a little bit on the stream, and I don't think I want to beat this down on anybody, but we gotta make it happen. One is pretty succinct, and that is right here. If you look at this guy, this one gives me a little bit more hope. As you can see, the 50% marker, if it's that platform, let's assume that this is your S-curve and this is the platform for the 50%. If it goes all the way back up, for example, to what we see here, and it's kind of interesting because it does kind of connect with a lot of these downward lines, especially here you have the cat ear line from way back in November, and you can see we're kind of sitting in this pocket right now, sort of sitting right above this trend, okay? Maybe even a little bit below it. But you can see that as we look at this, the 50% marker would have to then be thought of as like that place where we created a platform at like 35 now. That's what the number is now, which goes back to like that backup value that we had after the major SOS on the big run up. Where does that lead us to? Pretty much like 290. It's not that low. That's not that bad. That's very similar, if not right on point with what we might expect if we were to continue to drop right here. You can see I've got it like a 280 something, 285. That's the red line that I've talked about that on the big picture I think is probably representative of the creek. It's my mathematically, it's my best estimation. Okay? It may not be right, but it's my best estimation. That's all I can give you, is give you the best that I can give you. So does that jive? Yeah, 280 to 290 is below 3. It's not great, but it does kind of make sense of this big macro potential, right? Macro S-curve that we see happening right here. Now another one that's perhaps not so fun would be the one from August. We already know that this one didn't work out because ultimately, if the 50% is at the same point, then we've already gone past it. So this one's kind of out the window, all right? Meaning like if there was an S-curve here, it's gone. Like it can't be measured, not that way anyways. The next big one would be right after the Judge Zern decision. This is the one that's going to get you, and not in a good way. Because the only way I can measure this, again, in just doing it like from as non-biased standpoint as I possibly can, is from the peak here, and I'm using the weekly, so it doesn't have that extended hours action. All right, it goes from basically 47 and it terminates way down here at 98 cents. That sounds a lot like $1, doesn't it? Yes, it does. Why does that worry me? Because I got that target, the $1 target on the combo chart, using a very similar methodology. There was a massive S-curve with a triangle that was descending, and it gave me a breakdown target of $1. I distinctly remember somebody in the chat saying there's no way it's going to $1. Okay, but here it is. The target is still there. Why would you use this particular point, Booksy? Why would you use the bottom here at 719 and the top at 47? Why not use the higher point like at 11? That would make it lower, right? Or that would make it higher, right? You could choose how you wanted to do this. So why there? Because ultimately I can't unsee what I've seen. So like there's no sugarcoating it. Like if this is an S-curve, it's either shallow or it's not. It doesn't make any difference whether you think it's shallow or not. These are the two ears. Like this is your first and your second ear, as we call them, on an S-curve. Where have we seen S-curves like this before? All over the place on AMC. Here's one right here recently. All right, recently. This is not old news. If you want to just go look and just see it, there it is. Like right here in recent days, we've had one, and look at where the 50% marker is. First ear, second ear. Almost always, there's just kind of like double tap around a center mark on 50%. This is very recently. This was in November going down into February. Very recent memory. All right, we could go through this chart and probably find 30, 40, 50 examples of the exact same thing. One of the easiest ones that I look at is this original area, because everything's a little bit more blown out here. You can just see it really obviously. This example is pretty clear, and it's the one on that big distribution motion, which was from the March top all the way down to like May. And this is one that, again, is pretty easy to identify, and you can see that the 50% marker is right on that first ear. In this case, it looks high, right? But notice that the breakdown on this particular one is very critical in terms of like the level. Same thing here, 50% marker. All right, we could go through this over and over and over again just to kind of hammer home that point. This is a shallow S-curve in an odd way right here. You can see this one. And I'm trying not to like beat the horse to death here, but you get the point. So here's a 50%, right? You can see here, like this is higher. This is a shallow S-curve. So it looks like there's two cat ears. This is kind of similar to what we're experiencing right now. This might be a good counter example, but ultimately, because it breaks down, it never goes beyond here. You can go back and then look at it on the big picture and say, well, where was the 50% marker? Guess what? The 50% marker was on the bottom of the first ear. It's that first support on the way down. This almost always is the case. And again, I could go through so many of these as an example. I'm not trying to be heavily bearishly biased here. I'm just saying, like, if you're looking for why are you measuring it that way, that's my reasoning. Because it patterns out that way. So if I'm being just 100% unbiased and I'm just looking at this as what is this presenting itself as? You have a pretty huge stopping point right here when we hit 670, basically $7. This is where most of the volume is early on. You've got a pretty harsh sell-off and a pretty harsh sell-off, both kind of back to back around this period from September all the way through October. To me, this is just shorts exiting and re-entering their position. And I don't see it as a good thing, ultimately, because we failed to break out. We had a UTAD, and then you have $6 was in the cards. And, of course, that's the thing, right? Is like I identified that there was a $6 target. It was pretty easy to see that from where we were at that top. What I didn't identify was that could be the midway point of a major S-curve, and it was. Okay, that was only like the halfway point of this move, was where we camped out. So now when we're looking at this, again, as objectively as possible, and we're trying to not be super biased, this is the way I would have to describe that S-curve. And I don't have another way to describe it. So if I'm looking at July 2023, it's very end of July, right? Really, it's August, but you get what I'm saying. End of July 2023 to now, if I have to say, is this a midway point on an S-curve? Could it be shallow? Yeah, it could be. But that could still result in downside. And even before, when I'm talking about this March thing, I still thought this could come up and then come way back down. We've talked about that repeatedly. I'm not going to beat that down again. Those of you who know, and those that don't, just know that I've been talking about the possibility that this has an upthrust that goes up to near 14 and then comes crashing down. And that's just assuming that there's a desire from some long to exit the play and it's not actually bullish during that move. You know, those are both kind of contingencies. But that's it. The S-curve here is not a pleasant one to measure. And it measures, in my opinion, right down to $1. And that might be enough to say, like, well, look, man, okay, fine. So what? You've got a really clean 50-50 measurement where this is half the move, and then there's some kind of a apparent S-curve. And then if it dropped again, you would have almost exactly $1. That doesn't prove anything. What's the point of going to $1? Well, this is where you have the problem, okay? Because A, you're going to have a whole bunch of people say that's not possible. They're going to say, nah, that's not possible. You can't go to $1. You would have to reverse split again. Okay, well, what's preventing it from reverse splitting again? I mean, if we're just talking about shorts, like, isn't that their goal, to bring the price down? And then if I look at this and I look at it as a macro pattern, why does it seem impossible to us that that could happen? Because to me, I look at this and I'm like, yeah, you know, if this is a big S-curve, we're now breaking down into this long-standing bear channel that we had way back that was established as top, bottom, and top, basically, during the peaks that happened in 2016, 2017. That was the trend that we were in. That was the trend that we went back to in the COVID drop. That's the one that this whole thing reversed out of. And look at where the bottom of that trend leads to now. The exact same point that we're targeting. So do I want it to go to $1? No. Do I think that its value should be at $1? No. Do I think it's possible? Based on the charting alone, If I didn't know anything about the market cap, absolutely 100% yes, it is absolutely possible. Because this pattern has appeared so many times and it's turned itself into a massive, straightforward drop-down S-curve where you've got a 50-50 turn. And if that's the case and we don't get that shallow bottom, that's where it would go. But Booksy, what about all the other stuff? You had that big, sine wave, and you had this and that. That sine wave didn't allow the stock to drop beneath like 250, okay? So I need to be really clear. This particular setup with the S-curve thesis does not make sense in the other setups, okay? It doesn't make sense of what we typically have seen in a distributive action on AMC necessarily. In terms of like a longer term distribution, that's not usually what happens. This is like a more of a huge reactionary one. But maybe we're warranted because we have a CEO who just keeps pulling the trigger on 250 million, 300 million dilutions left and right. And frankly, he's not cheerleading his own stock anymore. It's like he's trying to sort of set us up for the expectation that we're going to continue to drop. Do I want it to go that far? No. What about RSI? It can't go that low. It's been oversold forever. Yeah, but look, the same thing happened here where we have basically what we would call like an LSPY, or in layman's terms, it's a bear flag. We created a long-term RSI weekly bear flag before a major drop. And we're doing a smaller version of something like that right now, and it could go either way. And I don't want people to think that it has to be up. I just think it's irresponsible. I don't feel like it's the right thing. I'd be glad to be wrong if it doesn't go down. But what I am saying is that if you look at this historically, the lowest this has ever gotten, at least as far as back as we can see, and I know it's a different stock now, but even still, this is not as low as it was in March of 2020 on the weekly time frame. And if you look way back to August, this wasn't even the lowest the stock was, but this drop sent it plummeting. So it would be really silly to say like it's not possible that the RSI could continue to drop more just because it's already oversold. That's a false statement. It's absolutely possible that it could drop more even though it's already oversold on the weekly and has been for a while. It just can. And then you have to go back and say, well, where are the buyers? Where's the stopping power? If the stopping power is not there, it's not going up. So the current S-curve puts us basically going into next earnings, which is out in like May or something like that. Pretty much then it puts us in a really bad place where we would be like a buck. Now, I'm not saying that that's going to happen, but I found a secondary one today that I liked even less, and that was one that I found drove us down to 64 cents. And I went to look at it and said, well, I don't really understand, and that was with the extended hours action. I don't really understand how that could be possible from a fundamental standpoint. The stock would be bankrupt by that point. It just doesn't make any sense. But I went and asked, no pun intended, but I went and asked the Discord group because I forgot and I couldn't remember. I said, well, where was the 8 bottom? And it's like 65, 66 cents. So if you take that extended price action, I wasn't doing that on the weekly. I took the regular price action and it says $1, right? You take the extended hours price action and you look at this 50% marker and this takes you straight down to, if this is a big old fat like S-curve, where we're just kind of repositioning, changing our positions out in the middle and then dropping again. This takes you right down to right after earnings, basically in mid-year, it takes you down to 63, 64 cents, which I cannot imagine is some kind of a coincidence. It doesn't make any sense as a coincidence, y'all. Like, it just doesn't. Could it be a scare tactic? Maybe. Definitely possible. But look at it. This is the S-curve if this thing is not shallow. Well, what if it is shallow, Booksy? Well, if it is shallow, then my original thesis is right. There's no need to panic in that sense. Like, it's not dropping to $1, it's not dropping to 64 cents. It would eventually probably get down to about 2 something. Now, here's where things get kind of muddled. you'll notice that right now we're in a descending kind of a wedge. Like we have a little bit of a narrowing on the price action. It hasn't really left this kind of descending wedge in the middle. I just talked about earlier how that happens a lot on an S-curve. You get an ascending wedge or a descending wedge right in the middle, or sometimes it's more of a ascending or descending triangle where it's flat on top or bottom. Very typical of a midway point. But Booksy, doesn't a descending wedge often break upward? Well, yeah, it does. And I think that's where you get we talked about those shallow S-curves not that long ago in this stream, is that's where you get that response. That basically breaks back up and then you redistribute and then you come low. And that's assuming that it's bearish, that it doesn't ever turn and become bullish, which doesn't happen that often on AMC, unfortunately. It's a very small window where AMC has actually been a bullish stock. Very small. And we can kid ourselves and say that, oh, it really has been bullish at this time or that time, but it's really just the original run-up, the big one. That's it. That time window, that time period from that February through the June, that 6-month window, that was it. The rest of the time, this stock has been downward in price action. That's just the facts. So when we're looking at a macro picture, it's really hard to look at something like this and say, well, I think that because it's a descending wedge, it's probably going to break up, but then not assuming that it's not going to continue back down. I think there's still a strong likelihood that if it did break to the upside, we may not even get past this original area. And unfortunately, I think that could mean you don't get past 11 or 12, which is a bummer, before continuing back down. That's more in line with what I was thinking on a spring action here than a full-on reversal that goes way up high to the moon or something, okay? That's more realistic to me because that would indicate that there's still a change of character taking place, and that would require a lot of smart money involvement, period. You know, the reason why I find that to be kind of curious, and I'm going to use this as a transition point to talk a little bit about IWM and the Russell, is because some people have pointed out, like, hey, if AMC goes to like $2, it's going to be kicked out of the Russell. The market cap's too low. Okay, fine. But right now and lately, if you look back at where this has come from, ever since about October, which is when the market started taking off, the S&P, right? You have, actually, it was more like October way back, but anyways, S&P has been taking off for a while, okay? But when we look back at October this past year, all right, you can see that we are in the similar situation on the IWM on the Russell, which is this is the 2000 ETF. You could look at the Russell 3000 and the Russell 1000. They're going to look a little bit different, somewhat similar, because they share some of the same stocks in their groupings. But this particular movement right here is also an ascending wedge. Historically, IWM hasn't fared super well on this kind of a move. And I don't want to be like a negative Nancy and say it's bad. It's just that oftentimes this particular pattern, not all the time, but oftentimes, this pattern has broken down before it's continued back up. You get kind of a spring action locally, and then it goes. And it makes a lot of sense right here to come down to like 195 or something and come back and test that daily 180-day, 200 moving average. And it would make sense also because it matches the target of that rising wedge before continuing. The same thing happened when we broke out an IWM, again, the Russell, back after COVID. There was a really similar time period. It wasn't exactly the same, but you had like a descending, you can see the double top on RSI where we made a higher high. We came back into a previously traded range, right? You see what I'm talking about? I'm looking at the center of my screen right now. I know it's kind of a mess. But we went all the way back up. Well, when we got into that range, the volume had been dropping. You can see on that second push-up, the RSI didn't go as far. Then you have this really gnarly pullback, right? It goes back down to test the floor and then takes off. Why would that be similar to what we're experiencing right now? Well, there are some mild similarities. There are some mild differences. One mild similarity is that we do have, we do have a similar push higher right here that was accompanied by a lower RSI push. Like it just never went higher, Could it be a good thing? Yeah, I guess so. If this did break to the upside, RSI is kind of reset back down. It's got some room to run. One of the other key differences here is that this didn't have a big extension above the bottom. And the bottom, in my opinion, for IWM, if you're looking at that, it's really the difference between these two ranges. It's kind of right where we're at right now. We're sitting on it, which is this like 208 bottom right here from back at the all-time highs. All right, what does this have to do with AMC? Well, every single time that I think about IWM and I think about the small caps, I think about a lot of these meme stocks and how they got put into, especially AMC, they got put into the Russell. Remember? Like, as their market value rose, they went and graduated, so to speak, into these other ETFs. And it's kind of like almost like mandatory that you buy in if you're buying these ETFs that you're going to kind of like share, right, in all of the different stocks. But if you think about it, if you're going to drive a stock out of like that position, it may very well be in like kind of a counter way where it's almost exactly the opposite. So I'm trying to make a point here. I'm not saying that it's going to get dropped out of it. I'm just saying I don't know if that's an argument for it staying in, that, oh, it can't go below 2, otherwise it'll get dropped out. Like, so what? When this all started, it wasn't in IWM. Like, it wasn't there. I remember them announcing it was going into the Russell, you know? So if it came out, why would we bat an eye at that? You know, I feel like shorts want to take it down, period. What we're waiting for is that change of character. This, to me, looks like a selling climax, which is good. It looks like we could be hitting a bottom, which is good. But in the event that this ends up being this S-curve and it's not a shallow one and we don't get that reversal move back up to like 11 or so here, which is a massive move, by the way, in the event that that doesn't happen and this continues downward, and there's no stopping power, and it's just continually being sold off down to like $1 or something, I don't see why it matters at all what's going on with IWM, except to say that it could be straight up inverted, right? Especially as people are jumping ship. Now, that's not me fortune telling. I'm just saying, like, basically it's a common sense to me. Like, I don't see it as, I don't know, like a special kind of knowledge or something. What's strange to me is if you look at October, where does October start on the chart? It's like way back here. It really starts at the beginning of, I mean, we could talk about September a little bit, but it starts kind of right here at the beginning of this move. And this whole thing has been a giant wedging action, but it's been downward. And it's very much like the opposite of what we're experiencing here. And I don't want to, again, be too fortune-telly about it, but if it ends up being that it's kind of polar opposite of IWM continuously and we don't get that big buy-in, that reversal right here that I was talking about as a possibility, let's just say in theory it does come back down to like 195 and then it like takes off, okay? That very much could be something akin to us seeing like that big move to the upside, potentially, right? To meet that trend again before kind of crashing down. Alexa, turn off the timer. And I'm not saying again that this is going to be exactly what happens. It's just a matter of like looking at the big picture and saying, hey, look, IWM is post, in my opinion, small caps are getting to that point where they're ready to try again for all-time highs. I think they're gonna go for it. AMC, maybe they're just trying to get it to the accurate price point, and then they're going to ride it with the wave to IWM. It's going to stay in the Russell. We're not going to break beneath 2 or whatever the value is that would drop it out of that that grouping. But thus far, it's been fairly polar opposite. I mean, it's essentially been like doing the opposite. And I even was comparing it to a stock like ChargePoint, which has a lot of weaknesses to it. Technically, ChargePoint's lower than AMC right now, and it definitely looks like it could be in an S-curve and possibly about to break down and all this other jazz. But there's been things about this that have also been a little bit more encouraging, in terms of how it's navigated creeks. Like it breaks creeks, but it hasn't been losing them again. Like it hasn't been going back through them again. We're not seeing that with AMC. We're breaking out of things and then dropping right back beneath them. We're not getting that kind of extra little buy-in. We're getting these deep, steep upward motions that then sell off really fast. I can't read the tea leaves and tell you exactly what's going to happen in the future. What I can say is that this kind of a move could be like make or break for us. And when I'm talking about being on a razor's edge, I'm really talking about this motion right here as like a double cat ear on the possibility of an S-curve. So without going any further about this and just kind of beating on the same points over and over and over again till people like believe me or something, my goal is not to tell you how to trade this stock. My goal is not to tell you that this stock is ultimately going to recover forever and ever, you know, and you're going to get all your money back, or that this stock's going to dump and be delisted. All I'm trying to do is be as fair and accurate as I can. Maybe sometimes it can feel like a little hyperbolic, like, oh, he's saying it's going to come to $1. That's way out there, you know? Okay, fine. But we've said the same thing for the last 3 years. You know what I mean? For the last 2.5 years, whatever it is. If it's no different. Back here, people said it was never going to drop again, you know, when it first went to 3, and then it went to like 360. And now we're at 3s again after all that. After a 10-to-1 reverse split, we're back to the same values. That's a huge loss in value. And I don't get why people sometimes try to like forge that math to make it better than it is. It's not good. And we're still holding stock in a company that has failed to produce profit. What they're doing is they're decreasing their deficits, which is good. Like they're decreasing the amount that they're losing, which is good. They're helping themselves by restructuring debt, which is good. They're doing things they need to raise capital, good. They're doing diversification, acquisitions. They're doing what they need to do to try to get into a better financial position. But the bare bones, straightforward of it is that it's still a company that has more liability than it does income. Like it's got more liability than it does assets, period. And if you're a financial analytics and you're into that, that's not a winning combination. Okay, that's not a good thing. If your assets do not outweigh the liabilities that you have, you are going to go down. Like you're going to be shorted down. And to be honest, I think if we were not so wound up in this stock and like its future, I think most people would probably agree that a company that's doing that, even if they're doing what they can to course correct, even if they're consolidating, even if they're fixing their debt and all this stuff, it's probably justly shorted. Because the market is supposed to be responding according to those kinds of statistics. It's supposed to be responding to the financial health of a company. And I don't think anybody who's paid any attention has felt like that wasn't the case for AMC. Like we all kind of knew that it was weak when it was up at $72, right? And everybody was like, this thing's way overvalued. But I don't get the idea that the squeeze is not really a fundamental thing. It does sometimes have to do with value, but because if you think it's undervalued, it might be a really prime stock for a squeeze. Go out there and look. It's a mixed bag. I mean, there's analysts that think this thing is undervalued and it should be higher. There's lots of analysts who think it's still way overvalued. You might say, oh, well, they're all in somebody's pockets or whatever. No, I don't think so. A lot of them don't even own this company. Like, they don't have any skin in the game. They don't care. Some of them, yeah, they have a little disclaimer that says they short the company or something, you know. But a lot of them, if you go look at them and just kind of see what the analysts are saying, they don't have any reason to care, you know. They're just giving their opinion because they have to on that platform. And not all of them are like that. But there's aggregate services that you can look at, and they're mixed, okay? So when I look at something like AMC, like I get where y'all are coming from. I read through the chat as we're going. I get why a lot of you are saying the debt restructuring taking place would be a big catalyst. I understand what you're saying about dilution in the long term because they're raising capital. None of those arguments are wrong, and I don't actually disagree with you at all. Those are positive things, but at the end of the day, it doesn't matter if you have really good earnings beats over and over and over again until the stock has more income than it does losses. Okay, let's put it that way instead of liabilities and assets, right? It's not in a good place because it's not going to look attractive to institutional investors. And we need that institutional investor to step in on drops like this. We've had 30% over the last couple of days. And I said it in the very beginning, I said it's kind of funny but not funny. I actually got into a hedge position because I was thinking it might drop to like 360s. I got into a hedge position and I was off by a little bit my timing because I got into it like way back here on this second ear. And I didn't get any money from it because I wasn't able to roll it. As I anticipated it was going to drop and then just keep dropping. Instead we got this kind of double shakeout and I got burned, right? It's kind of funny how that works because it was only like a cent or 2 cents. I didn't even make any money on this drop. There was no volume. So the options chain was dried up like for those puts. Like it just had nothing. And I wasn't able to roll as a result. And it's like, it's weird because I was kind of right, but just having that slightly off timing, that's the name of this game right now, I think. And it just sort of embodies what AMC has done to retail over the last years. It's just taking your money. Like they want you to anticipate moves. Then they do something silly like a fake breakout over this creek here and over the ice. I mean, it's over this support level. Everything about this looked strong, initially. And then immediately it's like dilution news. And you can't even script that stuff. I don't know who's writing the script for this, but it's like, it's painful how timing and the setup here on that trap were so in sync with that dilution news. And I think that the delay from earnings to the dilution news is even more evidence that this is absolutely not retail's game. I mean, it's just not. Like everything about this, I was saying I thought these two tops were really distributive. I wasn't so sure about this bottom. Everything about this has been boring and misleading, right, up to the last moments. And I think that was by design. So if you're wondering, it's kind of funny but not funny. I actually did hedge and then I didn't make any money on it because the options chain is very rigged as well. I'll just give her a squirt if she's doing it. Okay. So I'm not sitting here to like gloat about anything or to say, oh yeah, I made so much. I would have made a lot probably. But I mean, I mistimed it by literally one day, it's just crazy. And that's all it takes. And it's bizarre how I think there was somebody else that said there was some puts sold at $4 or something like right before all this happened, or maybe it was calls sold. I don't remember, but it's been insane. So here's my thing, okay? Right now, I don't necessarily expect this to continue to drop straight through here. There's another support coming down, and it's a little weird. But this one comes from an equally important creek crossing. Part of me thinks that we're going to get kind of that S-curve motion beneath or between this as well. So I said maybe, 10 to 14 trading days. I would expect something like this to happen, which is kind of a bummer because it kind of throws everything out the window, right, that we've been talking about. Honestly, at that point, if we just continue sideways, we're just kind of in the same game, and I don't really feel super strongly about it either way. What I would want to see is that pretty much right after this kind of a move, this is a shallow S-curve, I would want to see it have a full recovery, not just to fill a gap back up here because there's definitely some gaps, but a strong recovery over the middle, and then a strong recovery way back over the 450 mark. That's kind of the only way forward that I can see with a spring-like action here. If that happens, and it's possible, but if that were to happen, what I would expect is probably that you're going to have a pretty succinct like 50-50 price action swing, and this is where you'd get that big run up that we had been talking about, where your 50% is basically at like 338 now. It's a little odd, but that's why I think we're going to see a push back up to like 340 or something on a sort of like a little bounce here, some kind of an up thrust, and then we'll dump again before turning back around. I think that'll probably mark out where that roughly where that 50% is. And then after that 50-50 move, this next one will get you up to the next marker, and then you have another 50-50, and you can just keep expanding them from there, so on and so forth. This is only in the event that this ends up being like a slingshot, and this ends up being the March setup, and you break out. And this could happen faster than I've drawn it, but I can't imagine it not coming down to this red line and having this kind of M cross down bottom. I feel like that almost, in my mind, it's almost like it has to happen. So I don't know why it wouldn't happen. And then the next 50-50 up would take you to like $7, $6.90. Does that make sense? Maybe. You know, when we look back at $6.90, you can kind of tell if is that a 50% marker? Is that important? Yeah. $6.90 was, remember that $6.82? We kept messing with that number way back here. We sat at like $6.82 for like ever. That makes sense to me. So does it measure out well enough to get you to like $6.82 right now? Sure it does. You know, and that would be a clean like 50-50 recovery to $6.82. If you're talking about continuation after $6.82, we'd be talking about a lot more, because then you're looking at another 50-50, and you'd say, well, shoot, man, if that's like the big halfway point, then where's the, because that would be the big one. That's how it works on the slingshot if it works out. Where would the next one be? Well, you go to $6.82. It's probably not going to be surprising. It's not. It's $14, basically. And you're right back to the arguments that we've had before in the past about potentially coming up to retest this particular level from way back in September. So is there currently like a stage set up for a possible big move up like that? Yeah, it's still there. And I'm not against it by any means. But I do think that on the whole, I'm just trying to present you with an unbiased look at this. In the event that that doesn't happen, and this is kind of what I've been thinking about for a while, is that, hey, this is probably going to dip down here and then break up to around that $15 area. I mean, it's on my chart still. Is that still clean? Yeah. Is it still possible? Yeah. Then what? Well, then you have what happens next. Is it a big S-curve down to a new low? In which case, could you still get to that $1 mark? Yeah, sure. Or, you know, like that's not off the table all of a sudden just because you run up to like 14. And funny enough, maybe it's not funny to some, but if we ended up going to 14 and then 1, that would basically be like the prediction that I made like January 1st of this year. Although my timing has been horrible, as it usually is. Long term, there's a whole lot of conversations we could have about what this would mean if it continued down versus holding here, right? I think that on the big picture, because of the volume that we have, I'm still trying to be, I still feel optimistic because I still feel like there's a need to come back to this level between 11 and 14. Like, I still think there's a lot of shares that need to be brought back up there. And I think if you're going to short it down, I think that's probably where it would be. The problem is that the price action doesn't indicate right now there's buyers that are ultimately wanting to do that. Like, not right this second. It doesn't mean that they're not there and they're not buying. It's just that there hasn't been any kind of significant turn. And every time we've jumped a creek, we've lost it. And there's been no pushback from buying. It's like they're just kind of letting it go. It's an absorption technique is what it looks like. That they're just absorbing the retail buying and then continuing down. Does that make sense? and they're not having to push very hard because there's no major operator who's trying to buy back and drive the stock up. So right now, do I think that this is primed for a possible reversal back up to 14? Yeah. And I still think that that's a strong possibility. But just like we were talking about with the shallow S-curves over here, just because that happens does not mean that it's out of the question that then you can't continue downward later. That is not true. And we've seen this happen repeatedly on AMC, where that first push up, it is off of a shallow S-curve, but then it hits a top and reverses. And the first two examples I did in the stream today do the very same thing. And it's very possible that that's really where the bottom ultimately is found before a major change. And that could take a long time, and that ticks people off, but it could take a long time if that's the case. So maybe the debt restructuring is announced within the next week or so. Maybe there's some actual positive catalyst. I don't know. But it would take something like that, I think, to get smart money, quote unquote, institutional investors to see the drive and the need to come back up. And I think until then, you're just not seeing that change. That's just kind of where I'm at right now. I'm still optimistic on the big picture, but I was very bullish on the big picture until this period from, and I'm not bullish, it's just not as much. Does that make sense? Like if I were like 100% bullish on the big picture, maybe now I'm more like 75, because this setup right here really bugs me. It just seems like there's nothing preventing shorts from driving it down, and that's exactly what they did. And if anything, this just looks like somebody covering their loss, back up to 440 before that big drop, and like reshuffling their position, which bothers me a lot. And there's no question in my mind, this looks like a giant cat ear on the RSI and as it's falling. So it's a boring stream in some ways. I could have summarized it in like 2 sentences. I wanted to give you a bigger picture view that shows you the patterning, that shows you maybe a little bit fundamentally where I'm coming from, and then kind of end with that note that it's ultimately either the midpoint on a massive S-curve or it's a shallow S-curve. And if it's a shallow S-curve, you might have a major reaction, which is good for us. Very good, I would say. But even after that major reaction, there's no guarantees. Like, it's still a very strong possibility that this hasn't bottomed and that you're going to see that continuation. And the same thing has happened on the smaller scale in other times. Repeatedly. Like, it's all over the place. So I'm kind of in this place right now of quiet reservation about it. I feel like I don't really want to heavily invest in a long position. I think it's probably wiser, and this is just me talking to myself, all right? It's probably wiser, if I'm just being honest, to just avoid options altogether, unless you're hedging, for the possibility of this S-curve. And it would be a very mild hedging. It would be like one in which I'm just kind of gently getting longer positions for puts that I can exit if it does have volatility to the downside. But probably it's just shares, because at this point, yeah, you can make a ton of money if this thing reverses from 3 and goes up to 14. But you can also lose a lot, right? And there's so much at stake in the current setup, and there's no confirmation. Like, we got to the point where we made those creek crosses. It had that setup, but then it just never advanced. That's what bothers me. It's like you got to that crossing and then it just refused to advance, and now we're back down beneath what I feel is a very important creek level. So it bugs me, the setup bugs me. Would you rather have 10,000 AMC or an extra toe? That's a hard question to ask. Look, if the stock continues to drop in price, me personally, like, it depends on the amount, right, that I can afford, but I don't want to sink more money into it than I have to. But yeah, I think obviously you're given the option to average down. That's a choice you can make. Well, reverse split is worse than bankruptcy, but that's what happened. Woodstock. One example is Mullen Automotive. They did repeated reverse splits constantly. I mean, it was like that nonstop. So you say what you want about it. I don't really feel like there's a never situation on this because it's happened. And you look at like BBIG is another one that just kind of got just pounded into oblivion. You know, it happens. I don't know. I think that when GME moved, there was a whole lot of quote unquote meme stocks in that basket that moved. And some people still think that that was just sympathy play kind of stuff. I think it had to do with the technical setups for each of these in that basket. And it would require that you believe that there's basically like the setup's the same, like it was as it was back then, because they followed for certain reasons back then. The same would have to be applied to it now. It could be that institutions use it as an excuse to drive the stock up because they're like, oh, it's happening, right? And you start getting that buying. And now you have the money, the 6.8 million per 1%, or whatever the value was. You can drive it up, you know, for a lot cheaper. So yeah. So I'm not saying that it won't happen, but I think that if you think it's going to happen, it's probably a good idea to research the original run-up and determine if that setup seems likely to happen again. Because GME and AMC have not really followed each other very well since then. There's been moments, for sure, where they seem like they're tied, but largely AMC has taken a very different path. And it's because of obvious things. So, lake effects, that's not necessarily true. Of the two major run-ups, and maybe this one included 1, 2, 3, they were both readable. It's just that they weren't readable until like the last moments. So the run-up in March was absolutely something that Stockfather and I both saw coming. His target was, I think, a little closer than mine. He is PNF. I was off by like $2 or $3. The run-up going into August, I think I hit the nail on the head. And I got it pretty much spot on. And it was evidenced in my portfolio until I was dumb and didn't sell. Because I wasn't sure what was going on at that top, and I wasn't sure with the ape announcement what was going to happen, and I should have just gotten out. But I made a lot of money on those moves because I could see it coming. The bounce here that happened back in November, that was another one. That was pretty easy. That was an easy one because there was a shrinking iteration that happened in the bottom, and then the setup was like kind of demanding that you head back to the top of the range. So that was another one. These are all like incidents in AMC. Like they happened. They weren't like this big run up, right? Like they were much smaller, but this was like 160. This was 180. This was only like 70%. I mean, the rest of this time period, there's not really been enough to sort of talk about. It was really just flat. We did know something major was coming in August. I got that completely wrong. But it went backwards. I mean, it was essentially the same measurements, and then it just reversed. So it's possible to see stuff coming, but a lot of times it's not evident that you are going to make that move until the last moments. Trading is like 90% planning, 10% action. I mean, it's that last 10% that makes or breaks. Because like I'm waiting for confirmation. Every time I've said that in the Discord group, we have not gotten it. So there's no reason why I would buy in here if I haven't gotten confirmation. That's not how I want to trade. So that's the 10% moment, and that hasn't happened yet. It's just not. So I have my ear to the ground. I'm waiting for it, but it hasn't happened. And I'm trying to express that to you, but I'm a little too wordy sometimes, as y'all know. Like we're continually making the not right choice. Like we're continually making the not confirmation choice. HYMC, that's kind of interesting. Seasoned Curly's, I don't agree that AMC is worth less. The company has a big brand. It's been around for hundreds of years. But you have to remember that doesn't mean that a company can't go bankrupt. Kodak went bankrupt. Kodak was around at the beginning of the advent of photography. Talk about a company that you didn't think was ever going to go away. And it was simply because they didn't adapt to digital technology fast enough. It can happen. I mean, that company was around for a long time, 100 years. And it went bankrupt. And you have to remember that just because the company has a great reputation for providing, AMC is the #1 movie theater in the world in terms of like the size, it's the biggest. But if as a company they can't make a profit and they're not adapting to the times, eventually it's gonna catch up to them. And that's what's happening, is that it's catching up to them. They're continually running with a higher debt to income ratio. I mean, you can't do that forever. You got to fix it. I think that, I don't know, HYMC is one of those stocks that, again, it's like we want it to do well because maybe they found gold or whatever. Those that don't know, HYMC was the one that was acquired by AMC a while back. It's the mining company. Since then, it's not done, in a lot of ways, I would say it's not been very extraordinary as a play. Possibly it underwent like a quick squeeze that's followed by a distribution. Maybe we're going to enter a period of accumulation at some point. This is odd to me. This looks a lot like that cat ear kind of formation where you're getting this kind of bend, very similar, and then you might expect some kind of a major drop if it doesn't continue forward. This is a very different company than AMC in a lot of ways. It's a gold mine, so they are going to be make or break based on what they find in their property, right? Whether or not those minerals, those ores are valuable, that's going to have to be something determined by just the market on the whole. So this might be the major trend breakout. I'd have to look at it really closely. It's not broken over whatever moving average I have, which I think is the 180-day. I'm on the daily chart. But it has broken up to it. So I would just be really careful and watch that. This is a bottom, right where it's at right now. So same thing, you would watch it really carefully to see if it can recover above 275-ish, 280. If you can get over 275, 280 and it holds, then I think you're in a good spot to say, yeah, I think it's reversing. This right here is not make me super confident just yet. But it's right there. I mean, you can see it. It's right on the edge, so it just needs to push over. I don't see any reason why, if this thing were to break out, probably would end up at like $3 or something, $3.30. I don't see any reason why it can't grab here and then head back up. If this is an auto reaction, and then this is a bottom, like a phase B bottom, we could be in for a decent move to the upside for sure. long term, not like immediately, but over the next years. It just depends. I think more likely you'd have to see it break $5 first, and it probably could be this very long, boring, sideways kind of thing before that happens. The reason why I was saying the RSI doesn't look good is because I don't like that this is peaking right here already. It reminds me a little bit of those cat ear setups that we see. So just be really careful if you see it pop to like 3 something and then it slides back down, and specifically if it drops below this value right here, I definitely wouldn't be holding it. I'd be waiting for a reversal right here. It can't come back beneath that creek. I think if it drops beneath that creek, and then especially this one below that, you're talking about maybe around $2. That would be really bad, because I think you'd probably end up with a slide really, really low. Yeah, it happens. So I mean, if HYMC this is a different stock than like something like AMC. It's very different. It's a different industry. So could something like that drastically turn the stock around regardless of the fundamentals? Yes, it could. Finding a massive silver deposit could drastically change the outlook on this stock. And there's not really any way for us to, from a technical standpoint, there's not really any way to sort of measure that except this. Like, it just needs to make sure it has some support, and it would probably happen. It would need to make sure it has support back above the previous low. That's called a back test or a test. That's really the only technical indication I could give you that would be solid for like, yeah, this is probably a decent play right here. But I'm just warning you that if for whatever reason, maybe that news doesn't elicit a strong enough reaction, if this thing comes back down and starts sliding low, you're in danger of this being a sort of like a, not a halfway point, but we just talked about it, but that kind of like, I mean, really that's what this looks like to me, this flattening right here. I feel like it's pretty much already done. This might be your spring. Maybe it wouldn't take that long. It might be more like right here. You come back to the previous high, it's 5, trade that, and then just go. As if it's in a markup phase, it wouldn't trade this area again. Or it shouldn't, not really. It'd be like this. I don't know where it would go to, probably here, 16. I think I've made it go too far. 16 looks like the next major. Right there, you can see that one, and then 16 right around here. I eyeballed it pretty good. Yeah, it's totally possible. But if you play a stock like that, it definitely is going to... It's like, I don't know, a lot of those kind of stocks, they just... you are really kind of gambling, because you have to assume that they're going to continue to find deposits and all this stuff, and they still have to turn profit. You know, whether or not that happens is, I mean, it could be just whether or not they find, this was a split too, whether or not they find gold. I don't know. It's kind of weird, right? They have a lot of cash on hand, AMC does. We really need to see some of that debt restructuring news. I think that's going to be monumentally important. I don't think there's going to be any other catalyst that might matter right now, unfortunately. We're at a critical point, whether you're going to see a continuation on the S-curve or this breaks back up. I think if it breaks back up, we have a strong chance of like 14. I really do. at least we would get 7. I mean, I think that's kind of, in my mind, that's almost a guarantee because that's the previous floor. And we haven't tested it really. We did a lot of trading along it, but in terms of like a run up. So those are the 2 markers I'd look at. But if that doesn't happen and you don't get the shallow S-curve bounce here right where it needs to be, and this is that historic level of, hey, we're going back down to check that massive creek, I just don't see how this holds. I feel like it's going to probably plummet, by next earnings. And it doesn't feel good for me to say that. I just can't imagine what else could happen. Not right now. So it's not a pleasant thought, but that's where we're at. It's a very all or nothing moment. Maybe more so than anywhere else we've kind of been lately. These areas have been kind of tricky. We've had those times where you hit that top and we're like, well, if it doesn't continue, it's not good. It's going to go down to 6, and then it went down to 6. But these are moments that lately where it's been like, look, it's got the setup. Now it's got to take that action. If it didn't take the action, there's nothing you can do about it. You can wish all you want on stars. It's not going to change the reality of it. Because if an institutional investor does not think this is valuable and they don't see any kind of catalyst that's good enough, then there's nothing we can do. I don't care how many retail people buy and hold it. Like, you have to have that spark. You have to. There just has to be someone that initiates that that massive, squeezing momentum. So I don't know. That's it. So anyways, I got to get going. I'll keep a lookout on HYMC. Now that you guys pointed it out, I think it's a good one to look at just because it could be in a good place right here. But for right now, I would just say not usually wise to chase. You do whatever you want to do. To me, it looks pretty good. I just would want to see it come back above this bottom at like 270, 280 level, come higher and then find support above it. And then continuation would be pretty strong, I think, from that point back to the tops of the range near 5. So it's a good trade. It just needs to have that continuation. IWM is kind of in a mixed bag right now. It's also in the same spot. I'm not going to bring the chart back up. It's in a rising wedge. It can probably have a pullback to like 194 to like spring action. Just dip back into the previous range real quick and see if it can grab some more liquidity. It doesn't have to do that. Spring's not 100% necessary, but it is in a rising wedge action. The volume is staying fairly stable. It doesn't look super low, like it's dropping significantly, which makes me think it could just be a midway point on an S-curve. You might get a little dip, and then it should rip, and you should get another big continuation like we did previously on that more recent move-ups on IWM back in like October. That's the setup, okay? I don't see it as being distributive, so even if there has to be a big pullback, I don't feel like that's the end-all be-all. I didn't talk about ChargePoint at all. To be honest, I don't know what's going on with ChargePoint right now. To me, this looks like probably a bear flag, but the volume is kind of misleading, so I'm not sure. We do have a bit of a divergence, but it's not really much to talk about. It's kind of a hidden one on our side. I honestly think that AMC's got a better chance of divergence here if it just reversed. But it's currently pressing against coming back down to the same 4-hour low that it was already at. So it looks bad. It doesn't look like it's got that turnaround momentum yet. ChargePoint's one of those stocks that keeps getting changed because the EV industry is a mixed bag still, and it's a risky play. Definitely could see this as a middle S-curve as well with some kind of an upthrust that then nosedives. So I'm watching like 250 above and then $3. I don't think it's going to ride to 5 early in the year. I think it'd be really late, maybe even next year if it did get there. It makes sense as a target. So long term, this looks like a good play to me, but I don't put myself under the illusion that this couldn't drop to like 124 suddenly, violently. It's still possible based on this setup that this is going to break down and has to break down. I'm not sure. So, yeah. Look, I'm not interested in peddling hopium, nor am I interested in making everybody, fearmonger or something either. I feel the person who's unbiased would probably look at me and say that I've had a lot of good call outs. I've had some pretty big misses as well. And I think if you're fair and you're balanced about that approach, you probably don't think that I'm trying to mislead anybody. And you definitely wouldn't accuse me of being a hopium or whatever they call it, somebody like shills or whatever. That word's come and gone, thankfully. I feel that this has been misleading, this area. I still think that there's that setup, and I've already talked about it. I'm not going to repeat it all. But like when you come on and you do stuff like this, you're going to have people that are going to kind of criticize regardless of what you do and compare you to this person or that person and, decide whether or not it's worth your time. If it's not worth your time to hear me out, then just don't be here. Like, it's not hard. I'd prefer to not have to deal with that. It would be doing me a favor and probably the chat a favor. So if you're somebody that just comes in just to tell me I'm wrong or whatever, or tell other people they're wrong, just don't bother, If it continues to happen, you're probably going to get booted. But I'm not in the business of trying to play to the audience either. And so just because you're bearish doesn't mean I'm going to be bearish. Just because you're bullish doesn't mean I'm going to be bullish. I'm just going to kind of say what I think and tell you what targets I'm seeing, tell you what's possible, what I think is likely, and then we could talk about probability, whether or not something is probable or not, and go from there. So that's it. Just kind of notice